Okay, I think we're just about ready to start. So hopefully everyone on the call can hear us. Okay, I assume you can. I'm off mute and the microphone is responding. Let's have a quick check in the chat group. Yes, perfect. Okay, wonderful. So, and just checking as well, everyone can see the screen share correctly. So it should just be on the introduction page of the slide deck. Perfect. Okay, wonderful. So just a quick thanks to everyone for joining us this morning. This is the second webinar that we've done since we've moved to a working from home and I guess quarantine way of life. Obviously, traditionally at World First, we were very face-to-face business, out meeting clients and you know, helping them with various elements of their international payments and e-commerce. So we thought the webinar series was a good way to connect everyone. The first one we recorded, myself and Josh, was a kind of a high-level overview on the financial markets and how they've been impacted over the last month or so. And today's webinar is a bit more, well, very detailed in comparison. We've recruited the help of one of our strategic partners, Ben, and we'll introduce each other in a few moments. But the idea for today is to spend half an hour, 40 minutes going through what help is available, what it means at a kind of a granular and at a more vague level, some best practices, and just kind of open up a bit of a discussion and really get Ben's thoughts on what's available. We've also received some really interesting questions from people in the build up to this webinar. And I think the questions that are being asked will apply to nearly every business that's in the same situation. So if you find that it doesn't quite answer specifically, don't worry. We'll try and find time at the end to answer some more detailed questions. Failing that, you can email myself or Ben, and we can get those answers over to you. So just a quick introduction to me personally. My name is Alistair. I've been at World First for 6 years. I'm in charge of the private client desk. So we look after personal transfers, people buying and selling properties overseas, people repatriating their salary from a foreign currency, or potentially just topping up their accounts in France or Spain, for example, if they have mortgages over there. And Ben, if you could just give yourself a quick introduction.
Hi, all. Thanks, Alistair. I'm Ben Grunberg. I'm one of the partners of Grunberg Co. I'm a general practitioner, but as you can imagine, for the last few weeks, I've been fighting alongside as many clients as I can to help keep their businesses alive and take them through this difficult time. So hopefully I can give you guys some guidance of what's out there at the moment.
Perfect. So the structure for today, really simple. We're just going to go through the government measures that are available. We'll then look at the furloughed employee scheme or system, which is, again, probably where the majority of the questions and concerns are going to come from. So we'll spend most of our time on that area, and then we'll go into some of the questions that have been sent through, and then the answers.
Great. So
we've condensed the initiatives into these 5 topics. What I'll do is, Ben, if you could sort of methodically work your way through these, and we'll kind of discuss them as we go. But if I hand it over to you for this slide, please.
Sure. So as I'm sure you can all see and have heard, there's a number of measures brought out for businesses and individuals alike. Some of them, shall we say, were potentially rushed through with a very kind of woolly and outline guidance initially. And we're seeing a lot of detail coming along over the last few weeks with almost daily updates. And as I'm sure you've experienced, the more detail that comes out, the more questions you have. So I'll go through what's on the slide, the main points is, that affect businesses in essence, and try and highlight the key things which you might not have come across, or just kind of the information effectively which sits between the lines. So start with look at the VAT self-assessment deferrals. Now, the government brought out two specific measures here. The first is being the VAT deferment. Now, deferment of VAT applies to VAT liabilities due between 20th of March and the 30th of June 2020. These liabilities can be automatically deferred until the 31st of March 2021. And by this, I mean, you don't have to ask the revenue for their approval or permission. You just don't have to pay it. They've also confirmed that there'll be no interest or penalties. So almost a no-brainer for most businesses out there. But I will highlight, and this is really important, that if you do pay by direct debit, you must cancel this because the deferment is still optional. And if you don't cancel your direct debit, HMRC will take payment. The other thing to bear in mind is that it doesn't cover VAT for MOS or import VAT. These liabilities will still be paid as normal. And the question that I'm always asked is, what about refunds? Well, refunds will still be refunded to you as normal. The other thing is self-assessment. Again, impacts a lot of people out there. Self-assessment, the second payment on account, which is normally due by the 31st of July, is now deferred to the 31st of January 2021. Again, this is automatic. You don't have to do anything. It's still voluntary. So if you want to pay it, you're welcome to. But there are no penalties and no interest of paying it late. But aside from these two measures which the government's brought out, there are other things that you can look at. And HMRC is supporting businesses through various time to pay arrangements and deferral of other taxes. We've seen HMRC grant up to 3 months deferment for PAYE and corporation tax, for example, with little fuss. And they're also given payment plans for larger balances, spreading these over 12 months. So it's definitely worth a call if you have those type of taxes, which don't get automatically deferred. However, again, these taxes are not automatic. You must get HMRC's permission for them. And in doing so, you will avoid penalties if you get the permission, but interest will still be payable. Now, the interest charged by HMRC is an annual interest, obviously prorated, depending on how long you take to pay, which dropped yesterday to 2.6%. So not a huge amount, but still something to bear in mind. Now, the next point here, the self-employment income support scheme. Now, I'm not going to go into a huge amount of detail on this one because much like the furloughed scheme, or the job retention scheme, there's a lot of detail and lots of nitty-gritty here. But it acts similar to the job retention scheme, but for self-employed. In essence, it allows self-employed individuals and members of partnerships to claim a taxable grant of up to 80% of their trading profits, capped to £2,500 per month. The difference between this and the job retention scheme is that the self-employed individuals can continue working. What you need to bear in mind here is there's a lot of criteria to ensure that you're eligible. But the main points here is that to be eligible for this grant, your turnover, well, your profits must be less than £50,000 and be more than half your taxable income. So if you're self-employed and have rental properties, this would exclude you if your rental properties produce more than half your taxable income. And if you do more than £50,000 worth of profits, again, there you're excluded. HMRC will look at, you can choose between the last year's submitted profits or the average over the last 3 years. So if last year was a great year for you, but the previous 2 years not so good, you can use the average of the last 3 years to make sure that you're under that £50,000 threshold. If you fulfill the criteria, HMRC will write to you directly. So if you fulfill that criteria, normally you shouldn't have to do anything yourself. They will write to you. With any of these points, obviously apart from the automatic deferments, which we spoke about a second ago, if you have any questions, contact the people involved. Now, normally, most of these schemes are automatic and should be written to you, but there are a lot of people who seem to be falling through the gaps, so it's always worth chasing that up. One of these ones is the small business grant, and now this is one which is applicable to most, but Also one of those schemes which when it was announced, it sounded a lot better than it's turning out to be in practice. So the small business grant is facilitated by local authorities, and it's available to those small businesses who are liable to business rates and were in receipt of small business rates or rural relief as at the 11th of March. What this means, in essence, is that those companies who work from home, or shared offices, service offices, co-working spaces, won't be eligible for this grant because they're not paying business rates, which is pretty disappointing. But if you're lucky enough to be one of the business eligible, then the local authority should contact you directly. It's facilitated by the local authority, not by HMRC. So it depends on where you are based, where your office is based, where you're paying business rates, and they will contact you directly. Every local authority is doing something slightly different, but most are sending application forms, because whilst you might fill in the gap, there are certain criteria, little criteria that you might need to meet. For example, your business must be operating in the UK. Those forms we've started seeing being received this week. So if you're looking out for this grant, just keep an eye out on the post. Most of you, I'm sure, are working from home, so just bear in mind this might be going to the office address. The next one down is the grant funding for retail and hospitality. Very similar to small businesses. Just to say also, some of you are making some questions. I'll try and address those at the end of this slide. So I'll come back to that. So going back to the grant funding for retail businesses. Now, again, similar to the small business grant, this is based on business rates. Now, it's available for those in the retail, hospitality and leisure industries, but only for those who operate a property. And now the business has to use that property, or occupy that property, and mainly use it as a shop, restaurant, cafe, drinking establishment, cinema, live music venue, leisure, hotel, or self-catering. So those who are working in the leisure and hospitality industries but don't effectively use the premises for those purposes won't be included in this scheme. The grant is based on, as I say, based on your rateable value. If your rateable value is less than £15,000, then you'll be eligible for a £10,000 grant. And if your rateable value is between £15,000 and £51,000, then you could be eligible for a £25,000 grant. The real kicker here, which again is reading between the lines, is that the relief is available per property. So if you, for example, operate a collection of coffee shops, then each property will be entitled to that grant. Also, you bear in mind that if you are entitled to the small business grant, you won't be entitled to the retail and hospitality grant. So it's one or the other. In reality, the small business grant is the same. If you're entitled to the small business grant, in reality, you wouldn't be entitled to the £25,000 grant for the retail and hospitality. You would fit in the £10,000 figure, but you don't get both. So going back to this, the £25,000 grant, the retail and hospitality grant, again, it's administered by the local authorities. So some local authorities are being much quicker than others. But if you have multiple establishments, then it's the local authority for each establishment based on where you pay business rates, which is administrating it. Now, we've seen some great results from this. Even to the end of last week, some of my clients were receiving the grant deposited into their bank account, no questions, no forms to fill. One of my clients just woke up the next day and saw £25,000 in his bank account, which is brilliant. Some authorities are sending out questionnaires, some are acting much quicker, some are acting much slower. So do give your local authority a call to see where they are, what the time frame is. But again, they should be facilitating it, and it should be automatic. The last one on this list is another one where there has been a lot of questions. So the Coronavirus Business Interruption Loan Scheme, which is a great mouthful, or CBILS for short, is in essence a government-backed loan. The governments have provided 80% against the lending or the facility for loans up to £5 million. I'll pay the first 12 months of interest with any lender's fees, initial lender's fees. So all in all, and on paper, it's a great scheme for both the banks and for businesses. Just to again, something here reading between the lines is it's normally deemed a term loan. So normally it's a term loan for up to 6 years. First year interest free, 5 years repaid. But it also covers overdrafts and invoice financing, depending if the banks offer those facilities. Not all banks do. So you don't have to take out a term loan. You could opt for an overdraft where, again, the 12 months would be interest-free, or invoice financing, 12 months interest-free. It is not to be used for refinancing. So they won't grant it to you if you're looking to, for example, refinance your current invoice financing in order to take advantage of the 12 months interest-free. But it is there if you want to expand it. Thereafter, after the 12 months, we've seen typical interest rates of between 2.5% to 5% if you're using a high street bank. And from those I've spoken to, they've been quoted around 4.5%. But this is one of the more controversial and ever-changing schemes. Ever-changing because when it was first brought out, the banks wanted some significant covenants and were quite onerous about what they needed from the businesses in order to be able to apply for the loan. So this is changing all the time, and even the most recent and quite valuable change is only a few days ago, where banks were forced, or banks have dropped their requirement for a personal guarantee, PG, under £250,000. So that's quite significant. Those who are seeking loans of more than £250,000 under this scheme will still be required to provide some form of security. Now, the security is only for the remaining 20% above £250,000. So to give you kind of a working example, let's say you wanted a loan of £350,000. You would only be required to provide security of over £20,000 of that lending. So the £100,000 above the £250,000, of which 20% you need to provide security for. Again, which is it's pretty good at the end of the day. The main thing here is how strict the banks are being in providing these loans. It's been one of the biggest uptakes of this, one of the biggest measures which has been uptake of measures. There is been a huge number of applicants, but very few have been successful in actually obtaining the loan so far. Again, with these changes, who knows? But most banks are being very strict with what they want. And what I'm sure some of you have found is that they're only dealing with their existing clients and not taking on any new businesses. So to be eligible, the business must be viable and sustainable. It used to state profitable, but now it's viable and sustainable. By that, they mean that you don't have to have had history of profits. Previously, you did, but you don't have to have history of profits. You need to be able to prove that had the coronavirus not impacted your business, then you would have been able to continue trading with what you had. So it doesn't rule out loss-making businesses, but it does seem to rule out startups or those who are looking for the next round of investment. In order to justify this, to prove this, they're asking for the last full accounts, up-to-date management accounts, cash flow forecasts for the next 6 to 12 months based on the current impacts, and that's a kind of a really negative cash flow forecast, highlighting the amount of money you need, and a cash flow forecast for the next 6 to 12 months, showing what the business expected to do had the coronavirus not hit. This is their way of proving that you would have been a viable and sustainable business. And on top of which, a detailed narrative explaining how the coronavirus has impacted the company, why you need the funding, and expectations of the business once it reverts to normal. So quite a lot of information. And for the forecast, this is really key. This is where they're going to base most of their approval, whether you get the tick or not, is based on those forecasts. And for those forecasts, they want to see you taking advantage of all the other schemes available to the business. For example, deferrals of VAT, deferments of corporation tax if that applies, any business grants, and any furloughed employees. They want to see that in the forecast, and they also want to see what the company is going to do after this difficult time that we're in, and they expect from July onwards to see you start coming back to normal. So that is really key when applying for these loans. But as I say, it's constantly changing. If you have spoken to your bank to ask for one of the loans in the past and found it too onerous, too much covenants, they're rejecting you because of X, Y, and Z, have another conversation with them, because they are changing how they approach this. They're being forced to. So that kind of brings us to the end of this slide, and I'm going to try and answer some of the questions that you guys have had on this. So,
thanks, Ben. Can you see the Q&A
yeah,
feature? Perfect. I think just on that last point, it's in terms of the banks, having strict guidelines. Obviously, they're seeing unprecedented levels of demand, but also they're also receiving a lot of pressure from the government. If you look back at the 2008 financial crisis, it was a similar situation where central banks have made available more cash, and it wasn't being lent out at the correct rate, which created this big disparity between the people on the street and obviously the financial institutions. So I think you've highlighted a really key point there, that if you've had recent sort of trouble getting in touch or have been put off by the amount of work involved, now is obviously a good time to reopen those conversations and see what's available.
Yes, definitely. And I have heard on the grapevine that that after Easter we should expect some more announcements by the government, and maybe some introduction of the CBIL scheme to some more of the challenger banks, which would hopefully change how things are dealt with slightly. But we'll live and wait for that. So kind of going back to the questions. The first one here is, does the VAT deferral cover any VAT liabilities for VAT quarters ending 30th of June 2020? Unfortunately not. Now, again, going back to the scheme, and with all these schemes, they have a time frame in place for the VAT deferrals. It covers VAT liabilities payable by 30th of June 2020. They have commented that they may extend these. So that liability is due afterwards, so therefore it's not really deferred. The next question is, if you're a company director at more than one company, can you furlough yourself in one company, claim the company? Okay, I'm going to come back to this one because it relates to the furloughed employees, and actually it's something which we're going to talk about next, going into a lot of detail on the job retention scheme. The next question is, are the newly self-employed covered by the income support scheme who are unable to show 2018-19 accounts? Okay, so again, it's not one I've gone into much detail about today, but in essence, in order to apply for the self-employed scheme, you need to have been trading during the 1920 year. So I'll come back to you on that one with a bit more detail. That is a bit more difficult. In reality, it will cover you. It's just the calculation as to how your grant is calculated is different to those who have been trading previously. At the moment, no grant funding for hospitality businesses or rateable values of higher than £51,000. That is correct. For retail businesses with a rateable value of more than £51,000, retail or hospitality, you won't receive grant funding. No, you won't receive this £25,000 grant. Any tips on how to get Business Bank to actually respond? 3 weeks so far and 0 apply, even through those submitted overdraft requests by banks. Get the email. Okay, this is something a lot of you are coming across, and it's not uncommon at all. A lot of you find it difficult to get the conversation started with the banks. Now, I was going to come onto this in another question later on, but I'll kind of address it here. Most banks are only dealing with their existing clients, as I said, but there are 40 banks on the list of lenders. Now, some of those banks are very small and kind of outside the high street, and they will facilitate such loans and tend to be quicker about it, but they're more expensive. So after 12 months, their typical interest rates go up to 5 to 12% even, because they are not your typical high street. I came across something really interesting yesterday. It's a company called Swoop Funding. They're an online kind of comparison website for this scheme. You can submit all the information that I talked about before, the forecasts, the accounts, through their website, and they will go out to all the various 40 funders and work out which ones are available for you. So it might be worth looking them up. I only came across them yesterday, so I haven't gone into detail, but there are people out there trying to help facilitate this, but understandably, the high street are just not reacting quickly enough to this. And the last question, are businesses attached to the leisure business not running an actual venue entitled to the grant? No, this only applies to those who are paying business rates in respect of the venue, which is applicable, which is either using the venue for, as I said, as a shop, as a hospitality for leisure. You must be using the venue for that purpose, as opposed to actually being in the leisure industry. For example, travel agents will not be able to take advantage of this unless they have a retail outlet, for example. Okay, so I think that covers those questions, and now on to the big one, the furloughed staff, the job retention scheme.
Just before you get started on that, I thought interesting statistic this morning. So this was from the BBC, but obviously this feels like a very localized problem for people in the UK. Obviously, we're seeing it all around the world, but they've estimated that more than 80% of the global workforce have now had their workplace fully or partly closed, leaving effectively more than a billion workers at risk across the globe. So truly a really kind of global situation that's unfolding.
That's a high number. It's a high number. Yeah. So unsurprisingly, this is one of the points which has the most questions. It's also one of the it's one of those ones which I've mentioned before, where the more information that gets put online, the more questions people have. Furlough is a word that probably no one has ever heard of before until a couple of weeks ago, and it's a word that you can't go a day without hearing. So what is a furloughed worker? In essence, it's an employee who's on furlough is still an employee in all intents and purposes, but they're not allowed to work. It's an alternative to laying a member of staff off and redundancy. The employee will still be entitled to all their rights as before, such as sick pay, maternity, paternity, unfair dismissal, and redundancy. They're just not allowed to do any work for the business. Now, for a furloughed employee, and how the job retention scheme works is that if you were to put an employee on furlough, then the government will reimburse you for up to 80% of the wage, limited to £2,500 for the period that they are on furlough, starting from the 1st of March, and it expands a 3-month period, so March, April, May. So it's really not a long period, but they have again said that they are considering, and they probably will extend this. Now, the 80% covers the employee's salary, and on top of which you will also get the corresponding employer's national insurance and minimum auto-enrolled pensions topped up. Now, going back to what does it mean to be furloughed? So, as I mentioned, the employee continues with their employment rights. they are just not allowed to work. And by this, I mean they're not allowed to do anything that can provide a service to the business or generate revenue for the business. So if you have employees doing debt collection, internal accounts, who are HR manager, those are all providing services for the business. And then obviously the normal people who are out there generating revenue, they cannot continue doing that work. Once the employee is on furlough, they effectively are not allowed to do anything. They're at home, kind of feet up, doing nothing. So they are, however, allowed to do training. So as long as this doesn't provide service or revenue to the business. So they're actually encouraged to do CPD or some form of training whilst on furlough. But as I say, they are employed, they're normal contractual, and employment rights still apply. But by putting someone to furlough, it is a change in contractual terms. So a furlough employee, sorry, we're kind of dropping chains a bit here. A furlough employee an employee must agree to be put on furlough. It's a change in their contractual terms whilst they still maintain their previous existing contract. So this is really key when it comes to talking about their salary and reduction in salary. So a furloughed employee, you as a business will get up to 80% as a grant back from the revenue. But the employee is still entitled to their salary as normal. That said, the government have allowed you to temporarily reduce their salary to the 80% threshold, or lower, depending on the rebate that you're getting. But again, this is a change in their contractual terms. So it's really important that if you're considering reducing someone's salary, that is agreed by them. They must agree to their change in terms. Obviously, the alternative, and if they were to disagree, the alternatives are things like layoff and redundancy, and in which case it's a very difficult position for an employee and for a company to be in. So who can you furlough? You can furlough any employees who are on the payroll on or before the 28th of February 2020. This includes company directors. It's a big question. It does include company directors. However, company directors is still a bit of a grey area. As a company director, you owe a fiduciary duty to the company. You still are required to perform some duties for the company. And as such, in some circumstances, you cannot cease work completely. So HMRC have allowed that, and I'm going to quote for them, where furloughed directors need to carry out particular duties to fulfill the statutory obligations they owe their company, they may do so provided they do no more than that would reasonably be judged necessary for that purpose. In essence, a director can be furloughed if they cannot, but they cannot undertake any work which would, again, generate a revenue, provide a service to the company. They can, however, do what's necessary to keep the business alive. How much can you claim? Again, this is a big question. You've got the 80% we talked about. So you can claim up to 80% of the employee's wage, and obviously on top of that, the national insurance and minimum pension contributions. And this is even for employees on national minimum wage, so only it's 80%. So for employees whose salaries vary, who might be on a seasonal contractual basis, if the employee has been employed for 12 months more, you can claim the highest of either the same month's earnings from the previous year, for example, what they earned for March or April last year, or the average monthly earnings for the year to 5th of April 2020, so for the year to 31st of March 2020. If the employee has been employed for less than 12 months, then it's an 80% of the average monthly earnings since they started working. You can also claim, on top of that, regular payments that you're obliged to pay your employees. And by this, I mean any obligatory overtime and compulsory commission payments. So compulsory payments are included in the calculation for working out the 80%, but not things which are discretionary. Discretionary bonuses are excluded, and non-cash payments, such as benefits in kind, are excluded when calculating the 80% rebate. The next point is, what period does this relate to? As I said, it starts from the 1st of March and goes to for 3 months. Now, the reason why the revenue have chosen the 1st of March as a starting date is because an employee can be furloughed and in respect of the grant from when they stopped working, not necessarily when they agreed to be furloughed. So you can agree with the employee today that they're going to be put on furlough, but if they stopped working on the 1st of March, you can backdate the period to the 1st of March in order to obtain the grant. So that's why the 1st of March is set as the start date. You can backdate this. It also is very relevant to anyone that you've made redundant who you can reinstate and furlough. The minimum period for furlough is 3 weeks. However, again, a question that's often asked is you can furlough an employee multiple times. I've got a couple of clients who have 2 employees doing similar roles, but they only have capacity or requirements for 1 right now. What they're looking at is doing a rotation system. They're putting one employee on furlough for 3 weeks, taking him off, putting the other employee on furlough for 3 weeks, and doing it 3 weeks on, 3 weeks off, and effectively shift working. You can do that. Now, how does this work in principle? So, in principle, you run your payroll as normal, either using the full 100% of the salary or any of the reduced rate that you've agreed with the employee. You run the salary as normal, you pay them as normal, and then you make a claim shortly after or when running the payroll. This is the intention, bear in mind. The exact process is yet to be announced by HMRC, but the intention is you make the claim at the same time as running your payroll, and the revenue will reimburse you for the money that you're paid, the 80%, once you have submitted the claim and they've reviewed it. Now, the intention is for this to be up and running at the end of this month. So all being well, the first refund will be received in May. We will wait and see, because as with most things with the revenue, they are a little bit understaffed, and it's taking some time to fine tune their processes their end. So all being well, the furloughed rebate will start to see that being received in May. But there are some real kind of hidden potholes and details with this scheme, which you should be aware of. So I'll address more of these in the Q&A because there's some really good questions there. But to give you an example, the revenue amended their guidance the weekend to confirm that if you're contractually allowed, furloughed employees can work for a different employer. So this could help top up any income for any reduction in income, and it's dependent on the employee and their contract. Again, their contract still stands. If you're contractually allowed, the employee can work for another employer. Obviously, in this kind of environment, finding another job is going to be very difficult, but that's neither here nor there. But one of the main potholes, as I see it anyway, and it's one that's kind of almost forgotten about a little bit, is in relation to holidays. Irrespective of the kind of the furlough and the kind of the working arrangements around that, most, and I'm sure you've all seen it, most employees are cancelling their holidays. There's nowhere for them to go, so they're staying at home. So at the end of all this, we're going to have an interesting scenario where all our employees are going to want to take their holiday, their entire holiday period in a 9-month or whatever the remaining period of your financial year is time frame. Now, some companies are forcing staff to take holidays whilst working from home, but this is where it kind of raises a bigger question when an employee is furloughed. So in relation to forcing an employee who is on furlough to take holiday, you can do this. You can force employees on a furlough to take holiday, and from the recent discussions, this won't impact their furlough period. So for example, if an employee is on furlough for 3 weeks and you force them to take a holiday, or they take a holiday in between the 3 weeks, it does not impact their period that they are on furlough. the one thing that you should bear in mind, this is really something that's come to light very recently, is ACAS updated their guidance yesterday. I believe it's that recent. And their guidance states, I'll quote from them, if an employee or worker is temporarily sent home because there's no work and the employer intends to claim for their wages under the job retention scheme furlough, then they can still request and take their holiday in the usual way. This includes bank holidays, which there's a few coming up. Employees and workers must get their usual pay in full for any holidays they take. That's the key point here, just detailed by ACAS. We've spoken to them as well, and they've confirmed that in their opinion, in their view, employees who take holiday whilst on furlough, including the bank holidays that they're contractually obliged to, must get their full pay, not the reduced agreed amount. So if you've agreed to reduce their salary to 80% or even the £2,500 rate, you still would need to pay them the full salary rate for any holiday they take whilst on furlough, including the bank holidays. Something I'm sure is going to be fun to wrap your heads around when preparing the monthly payroll, but this is how niggly this area can be. And then the final point here, and again, really key, if sufficient numbers of staff are involved, it may be necessary to engage the collective consultation process when dealing with furloughing employees. Now, the collective consultation process is normally a process applicable to making redundancies of more than 20 people. Again, that is the guidance by the Revenue, and it's also similar wording from ACAS. It may be necessary. So anyone who's looking to furlough staff really should be speaking to an employment, an HR, someone from HR, speak to ACAS, get a bit more guidance, because there are real contractual and legal obligations here which kind of go outside the simply the arithmetic and the actual accounting side of the treatment. Okay, so I think that covers everything regarding to the kind of the overview of the furlough and the job retention scheme, some of the detail there. And to be honest, some of the questions that have been raised, some really insightful questions, will kind of highlight some extra points which we can talk about. So
thanks, Ben. That's really interesting. I'm extremely grateful for your sort of knowledge on these topics. Did you want to? We've obviously got the questions that we had sent in before the webinar on the next few slides. Do you want to move on to those and try and build in some of the recent ones that have come through on the live Q&A?
Yeah, should we do that? Because I think we're quick for time. So let's run through some of those. Okay, so
just to confirm for everyone as well, we'll like the last webinar, I'll collect all the questions afterwards, and we'll get some sort of high-level answers for everyone to digest, and we'll get that out to everyone on an email. But these were the first set of questions, Ben.
Okay, so have you been furloughed? Does this have any effect on your company pension, or do contributions from both sides stay the same? Okay, so employers' contributions, so your own personal contributions, that's voluntary, above and beyond the auto-enrollment, obviously. So they will stay the same unless you choose to reduce any voluntary additional contributions. That's for you to do. Your salary is still processed as normal. If your salary is reduced, again, it's still processed. You still pay taxes as normal, just on a reduced amount. But furlough does not impact your legal or contractual rights. So if your employer has agreed to pay more than your minimum auto-enrollment contributions, then this is part of your contractual rights. So by going on to furlough, you would have to agree with your employer the terms of the furlough. And if that means reduction in their additional pension contributions, well, that's something that needs to be agreed as part of that movement onto furlough. In reality, as I say, nothing changes unless you agree to it. Next question here: if you have death and service cover and put on furlough, are you still covered if anything happens to you while you're not working or you die from COVID-19? Now, this is a big topic which is kind of being dealt with by the NHS staff, and it's impacting them the most. But in essence, this is dependent on your employment contract and insurance terms. furlough staff are still employees. However, I have heard arguments from the insurers, which is not surprising, that they're disputing these claims for various different reasons. In reality, you need to speak to your insurance provider to confirm whether you would be covered. As a furlough director, what work am I able to do? I'm able to run payroll, pay taxes. I'll be able to run through policy. Would I be able to run through policies, online training? Is that still possible? Okay, so once we've got the information that's on the government website, we've also spoken to the business support line regarding directors, and they gave more clarity on this. So directors are allowed to keep the business alive, and that's just in terms of basic communication. What you cannot do is trade or provide service to the company. So it's more the providing the service is more relevant when there are multiple directors. So when there's only one director and you're putting yourself on furlough, well, there's certain things that you're going to have to do for the company just to keep it alive, to oblige with your contractual obligations from a company's house and company's act requirements. But you cannot do more than that. Personal training is allowed. And but I would expect if you were looking to train your staff, this would fall under the provision of service. So that I would assume would be disallowable. Likewise, I cannot see an issue with running through policies, but in reality, the legislation is really light and woody here. So if there's any specific kind of questions that you have and specific things that you want to do whilst on furlough, I would recommend speaking to the business support line, and that's businesssupport.gov.uk. They're the ones who are kind of giving them more detail about the guidance and these measures. So definitely worth giving them a call and asking the questions on specific little things. So next one is, my business opened 8th of February, but so not a full month, and closed 20th of March, again, not a full month. I believe when we eventually have to access the system to claim, we need to claim an average of 80%, which my guys, 9 of them, is not going to be a correct picture of what would have been in April. How do I claim based on what April's wages would have been? Okay, so yeah, it is a difficult one here. Can you claim what's on April's wages, what April's wages would have been? Unfortunately not. If they're paid at a variable rate, then this would need to be an average for when they're employed. So if they started the 8th of February, you look at the period that they've been working and you take an average of their wage. If they're on a variable salary, if they're on a fixed salary, then obviously you can use the fixed basis and effectively prorate February's earnings. So if they're on a guaranteed amount, in reality, they will get that well, it will be based on 80% of that, or £2,500, whichever is the lower. But unfortunately, you cannot use the predicted earnings. Likewise, in terms of the minimum wage question, the minimum wage increase is ignored when looking at what you're entitled to as a rebate. So if your employees are on a minimum wage, you're entitled to 80% of their salary as a rebate. Irrespective of that, brings it below the minimum wage level. Also, the government has said that the minimum wage only applies to employees who are working. So if you are on furlough, technically you are not entitled to minimum wage. Therefore, you can reduce an employee's salary to below the minimum wage whilst they're on furlough, if you are looking to reduce their salary from their 100% to the 80% cap figure. That said, and this is also a key point, is training is counted as working for intensive purposes, but obviously not under the job retention scheme. So if you are asking them to do training, or if they are training whilst on furlough, you would still need to pay them at least the minimum wage. Again, what you pay them is separate to what the revenue reimburses you for. The reimbursement, the grant from the revenue is based on their previous earnings. What you have to pay them is your legal and contractual obligations. And in the case of where they are training and you are required to pay them the legal minimum wage, this would obviously have to take into account the increase from April. How difficult would it be for businesses whose primary financial provider is not on the list of the top 40? Okay, this is what I came back to before and kind of touched on earlier. It's very difficult to obtain a CBIL right now. Hopefully this is going to improve over the next coming weeks, and it's constantly improving. But most banks are not taking on new businesses and only servicing their existing clients. That said, as I said, there's some fringe banks that came across Newable and Hitachi Capital, both of which are servicing businesses outside their existing portfolio. But again, the loans are, the rates are much higher than what you'd get from a high street bank. Do have a look at Swoop Funding, because that is swoopfunding.com. That does act as a price comparison site and seems to be kind of a funnel to allow you to apply to all 40 banks. As I said, can't comment on it. I only came across it yesterday, but it does seem to be doing a job of filling in that gap. So my girlfriend is a freelance yoga instructor, and her last class took place on Thursday, 19th of March. She submits yearly tax returns, and so far she's not heard from the agency with regards to financial support. Please can you advise how to proceed? Would HMRC contact her directly, or should be better off claiming unemployment benefits, statutory sick pay? Well, if she's ill, statutory sick pay is something worth claiming. It's not a large amount, but it's still worth claiming. Unemployment benefits, again, if her salary and her earnings, and this applies to furloughed staff as well, if your earnings have reduced, you could be entitled to unemployment benefits, universal credit. And universal credit, the cap, the level required has been dropped, so that it encompasses more people. So do check out universal credit. However, in her scenario, where she is entitled to a self-employment grant, the grant will be used when calculating her ability to claim the universal credit. So if she's entitled to that £2,500 a month grant, that will be used in calculating her earnings, and probably will put her out of the ability to claim universal credit. So unfortunately, right now, it's all about timing. Most of these measures are there. They look like they're going to work for most people, but it's about getting that money into your bank. Is taking a lot longer. Now, as you touched on there, the revenue should be contacting her to get her to apply for, to give her the information to apply for the scheme. I have not yet heard of those application forms going out, but we should expect it within the next month. Just to add on to the universal credit side of things, again, one of the things that they've changed is you do not need to attend a job centre to demonstrate that you're trying to gain for self-employment. So it's pretty obvious, but it's just a point out there that they have reduced the requirements to obtain universal credit. And I don't know if you've been listening to the news, but the number of people obtaining universal credit has jumped significantly. The last point here, my concern is we're all blindly relying on furlough and loan funding options, and later discover we do not qualify as we thought. My question is, the government requiring companies to source funding from elsewhere in the market first before we rely on government aided grants? Okay, so addressing the second point, well, the first point here is that you're not alone with your concern. As with most submissions of information to HMRC, the furlough claim is self-assessed. So you tell them what you think you're owed, and they may require it later on. And it may turn out in some instances that you were incorrect in your assumptions. And that's why it's really important to stay on top of the legislation as it changes, which is constantly happening, and understand exactly who can be furloughed and at what level you can claim. But if you use a financial advisor, if you use an accountant, then all being well, the submissions that you make you will qualify. Otherwise, you should not be making those submissions, really. So there is a bit of comfort in that, but obviously it's about timing. And the problem is that we have at the moment is that the expectation of when we're going to get the money back is a bit unknown. But all being well, furloughed payments should start coming back in May, and the C-bills, once you get those commissions in, they can take up to 4 to 6 weeks to turn around from when you start applying. regarding your question though, it's not, the government came out with some updates, I think within the last week, stating that that banks cannot force you to take an alternative option to a CBIL. So if you were eligible for a CBIL, you should be entitled to get your CBIL. So they will not, they've basically stated that you should not get alternative funding or aid in order to funding effectively before obtaining the CBIL. The CBIL should be available to those businesses. However, what they have also said is the CBIL is the last line of support. So in order to obtain a CBIL, you have to show that you've got the grants, you have to take advantage of the furlough, you have to take advantage of, not necessarily take advantage of furlough, but take advantage of the deferments, and do everything that you can possibly do before the CBIL, and the CBIL is the last resort. But you do not need to, for example, take out a new term loan instead of taking out the CBIL. And I think that covers the questions, or the initial questions. Okay.
There was just one last bit, Ben, on it was a kind of a scenario, I guess. If you've got, I know we're running a bit short of time. I don't know if you've got time just to run through this. I can see there's more questions coming in, which I think we'll need to just collect and try and get answered at a later stage.
Yeah.
But this was a sort of brief scenario. So, concern paying employees when cash flow has been affected. Still waiting for financial assistance. And obviously my employees are in a situation where they need the money quickly. And again, it was kind of when the help will arrive. In the meantime, I'm having to use my own funds to prop up that pay, and I don't really have any other option.
Yeah, this is a difficult position which most businesses find themselves in. They are, with the furlough, for example, it's expected that you pay your staff first and seek a refund from the government. With the self-employed grant, that has yet to be facilitated, and even with the CBILs, they are taking a long time to actually turn around. So unfortunately, there is no real positive here, but it is, the revenue are working as hard as they can to try and facilitate as much as they can. That's why they're trying to kind of spread the work to local authorities. We've seen the money coming in from local authorities now, which is great. And all being well, we'll start seeing within the next few weeks the applications arriving for the self-employed. And obviously the deferments come automatically. It is a difficult one for all businesses, but the reality is the CBIL is supposed to bridge the gap between you paying people and getting that money back from the revenue. That was what it was intended for, to the smaller businesses. It wasn't previously fit for purpose. But if you were looking for smaller amounts below the 250K mark, it might be worth having another conversation with your bank, or just shouting louder if you can, and getting an overdraft facility as an alternative. Because if you can get an overdraft facility covered by the CBIL, then effectively that will be the same thing and often quicker. Or looking at alternative lenders, or going through their online applications. Some of the banks have a specific online application which is faster than going through a individual manager or the phone line, because they are inundated. Unfortunately, there is not really a silver bullet here.
Ben, thanks very much for your time today. It's really reassuring to hear someone that's kind of got a grasp of the changes and the kind of the best practices. I think most people on the webinar will be in the similar situation, that this is all happened very quickly, and in times of kind of stress, it can be very difficult to digest the information about the you need. So yeah, really grateful for your time today. For everyone that's on the call or webinar, Ben's email address is up on the screen now, as well as mine. I think if you guys speak to me a while first, and you have got further questions, feel free to shoot them over to me on email. I'll forward them to Ben. But I'll make a collection of the questions that have come up over the last sort of half an hour, and I'll get some high level information for you on those questions. But if you feel that you have got a more specific question, it's a great opportunity to reach out to Ben and introduce yourself, and we'd be more than happy to engage in that conversation. Just a side point, I've been trying to reach out to lots of our other sort of partners to figure out, some other content. There's potential for us to do something on commercial leasing. So I think, again, lots of businesses in the UK have got a lot of questions about their lease terms. So that's something that we're going to try and put together over the next 2 to 3 weeks. So watch the space on that one. But yeah, really grateful, Ben, for your time today, and look forward to speaking with you again soon.
No worries. Thanks for having me.
Thanks very much, guys.